Welcome to Market Call. Our guest is Jaime Carrasco of Canaccord Genuity. He's going to take your calls, emails and tweets on North American dividend stocks and precious metal shares. Looking forward to lots of questions about gold and silver producers. 1-855-326-6266 or email marketcall@bnnbloomberg.ca. Jaime, thank you very much indeed for joining us once again.
Thanks for having me back. Nice to be here.
What's exciting you in the market right now? Copper's on fire. Gold is down from its highs of last summer. Well, give us your thoughts on gold, because you've spent a lot of time analyzing it.
Well, let's not forget that gold is manipulated. They're paying a lot of fees doing it. And I always put that in the back of my head. And that's why I always say, the mantra all along with gold has been it's about the fiscal deficit that we have. The longer it takes, the bigger the fiscal mess, the higher the price will correct. So from that perspective, for me, the key thing is to buy right and sit tight, as Jesse Livermore said. And right now I have a lot of gold and silver producers which have massive leverage to the price. And I think the price has to go higher. It's not being allowed to go higher. But copper itself, like I said last time in the last interview, is signaling a lot of money devaluation. You know, people think inflation is that things are going up in price, and it's not. The things are constant. It's the money that is devaluing. That's what Latin Americans learned very well through the 70s and 80s and throughout all our lives. So getting rid of your cash is key. And I think that what we're facing today is a little bit of a different storm, a bigger storm, because it's about the currency reserve. You know, we hear all this chatter from the central banks talking about a reset. People better understand what that means. It's a monetary reset, because it's the only way that we can pay back all of these debts. To me, that's clear. And so I continue to position myself using 4,000 years of history and forgetting about the noise that we're hearing with regards to the prices. Copper above 450 is a bad signal. Same thing with everything. Go to the supermarket. You know, they keep telling us we don't have any inflation, but money devaluations are occurring, and people's dollars are not going as far as anymore. Especially as we see also the middle class being decimated by policy. Look at the CPI number today. The Fed threw $2 trillion, and all we achieved was that. To me, that's not a good number, right? We're supposed to get a much bigger rebound, but it wasn't there. So how much more money are we going to have to throw to keep this thing alive, right, to keep it going? If you look at debt, when we get to that level, it's exponential money printing. And that's, I think, where we're going. And that's very bullish for gold. It's not very, very bullish for the dollar. And that's the key concern, the fact that the dollar couldn't muster a rebound about 92.50, which was the big breakdown last year, for more than about a week. And then this jump above 91 only lasted hours yesterday. So that, to me, is the key signal, is that the dollar, the currency reserve, is in trouble, being shown. And then again, look at 10-year yields as well. The Fed is losing control of yields. I look at the world from the fixed income side, and there I see a completely different storm than what the equity markets are showing. So I'm very comfortable with the position I have. I have a lot of financial life, as I would like to call them.
Okay, and what about interest rates? Sorry, I guess some people would dispute that the Fed has so much control over bond yields. They do over short-term interest rates. But what about interest sensitives? Are you interested in those, or do you think interest rates will inevitably rise? Sorry, go ahead.
No, I think rates are already rising. Look at the 10-year yield sitting at right now 165.9. Like, that's not a good number, because it was at what, 0.5 this time last year, something like that. Like, it got too ridiculous. Bottom line is, in order to bring yields down for the whole yield curve, they're going to have to print a lot of money, because nobody's buying treasuries. They're the only buyer. Same thing with Canada. I read somewhere that the Central Bank of Canada now has bought 40% of our debt. Well, whenever we get into this situation throughout history where central banks are buying the debt, producing debt, buying debt to keep all of this spending going, well, it's a facade. And that has very negative consequences. And I rather hedge for the consequences than the noise or the narrative that I hear today that everything's hunky-dory, right? I think we're on shaky ground when we look at it from the fixed income side, and I'd rather prepare for the other side of that hill.
Grant in Edmonton, go ahead.
Good morning, Andrew and Jaime. I have a question regarding the gold and silver producers that are very solid and the current price of gold and silver. Jaime, for myself and other viewers who are holding these precious metal equities, are the values of these companies being reflected based upon free cash flow, price to earnings, and leverage based upon the current commodity prices? Thank you.
As Warren Buffett would say, these are value plays right now. Let me put it into context. Last time gold was sitting at 1,600. I'm looking at the chart right now, which was back in 2011. Okay. The HUI, which is the sector index, was trading at exactly 610. We're sitting at 287 right now.
Whoa.
So about 50% lower than the valuation before. Now, what is that signaling? First of all, that's signaling a massive opportunity as far as I'm concerned, because I'm buying very cheap companies with solid earnings upside and solid leverage to that to the price of gold and silver at very cheap prices. But it's offering a massive opportunity. So that's why I keep saying, look at the producers. There's no need to start taking risk within the explorers just yet if you haven't built a solid foundation of producers. Now, what I'm more excited about is that I personally think that gold's going north of 3,000. Last year, everybody was talking blockchain. Everybody's now talking Bitcoin and all this because, if you look at some of those plays, they had about a 1,500 to 2,000% increase. But you have to realize that at $3,000 gold, these companies are going to have an earnings move of that leverage, right, of about 1,500 to 2,000%. Never mind the dividend that's going to be paid. Never mind the reserves on the ground. That's why these companies, I keep saying, these are the most amazing financial lifeboats you can buy. And what the current valuation at 276 of the HUI is signaling is that the money isn't coming into these companies just yet. But when it does, one of the things that Bitcoin proves at 60,000 or 57,000, whatever the number is that there's a lot of money sloshing around. So eventually the light is going to come on and this sector is going to be bought. That's why I'd rather own it now. I'd rather buy things when nobody's buying them and hold on to them than before. It's funny, as Canadians, we should really remember that analogy that I think it was Wayne Gretzky said. Don't look at where the puck is, look at where it's going. Well, I can tell you that these companies are going much, much higher, and Wayne Gretzky would be on my side on this one.
Let's check out those past picks. Jaime was on our show March 27th of last year. Your first idea, Alamos Gold. Now, they've had some trouble in Turkey, I think, but it's only a modest part of their portfolio last time I looked.
Correct. And again, geopolitical risk. That is the one thorn on their side. But otherwise, they are executing very well. We still like it. We have it as a buy. I like it. I think it's a great company, and I think hopefully at some point the whole issue with Turkey gets resolved. But again, the geopolitics are going to become a greater and greater issue going forward, and I think people have to be aware of that. We still have it as a buy with a 1550 target.
You'd stick with that one right now? Okay.
Definitely.
Cisco Royalty. Now, this one has last time I looked, this one has underperformed some of the big streamers like Franco-Nevada and Wheaton Precious. Would you buy this one again? Let's see how it did anyway.
No, actually, this is one that as I was towards the fall, as the price of silver broke above 17, I was already planning on increasing my silver content. So I had to choose which one was going to go, and this was the laggard, so it definitely went out of the portfolio, and only because of that. But again, it's a streamer, and when it comes to the streamers, this one's a bit of in the middle, because what I've been doing is adding some of the junior streamers that are coming along from behind, but holding on to my bigger ones. So Sandstorm and Franco-Nevada, those guys are solid in the portfolio. But then we had to trim them because it was underperforming in share price. It's the one that I decided to pull the trigger on as I switched over to greater silver content. By the way, we
and,
have it as a
so-
speculative buy with a 675 target.
Okay. I'm just looking over the past year how it's done versus, well, it's actually done pretty well versus Franco and Wheaton over the past year, but I think longer term it has struggled a bit.
Yeah, I kind of picked up sometime in May, right? Sorry, I was looking at
Sure.
Cisco Gold. We have it as a buy with a $24 target on this one.
Okay. Yeah. Okay. So this is a Cisco Gold royalties. You have a. You're
Royalties
still
is
in
what we're
that
talking
one.
about. Correct. Sorry?
Oh, okay.
No,
Okay.
that's the one we were talking about, a Cisco Gold royalty, which was the one that
That's right. Yeah.
I pulled out of to add more silver.
Oh, okay.
Yeah.
No problem. Okay. A Cisco Gold royalties. Yeah. Over 3 years, it's up only about 17%, whereas Franco and Wheaton are up more than 80%. Okay.
Right, that's why
let's move on from that.
It wasn't moving. So when decision on what do I trim to add something else, this one went.
Yep. Fortuna Silver. It's fortuitous timing. Let's see how that one did. We did just speak to the CEO, and you said you'd buy this one again, Fortuna Silver.
Well, considering that it was sitting at about $12 just last week, if we had done the call at that point, we would have had a completely different animal. Look, everybody's complaining
Yes.
because they went out and bought another company. Every time that I either own the acquirer or the acquisitor, I'm very excited. I think it's great because it's just making, I'm not buying them. I love it when my companies are buying other companies, not just me. And that's the case in this one. I think the acquisition's good. I'm, taking a look at Cote d'Ivoire, and things are definitely have settled down there for quite a while. Geopolitics was the only issue. But I think it's a great acquisition because, a silver company buying a gold company, I think it's what do you call it when you marry above your social status? Well, I think that's the way to look at this, to have a silver company take over a gold company. I like the management. They're going to hold on to the Rocks Rocks Gold's management, and I think it's a great acquisition. And by the way, because I work on asset allocation, if I was rebalancing the portfolio today, this would be bought. I would be buying this because now it's under my the relative percentage of all the other companies. So the beauty of using asset allocation for your buy and sell decisions is that it takes the emotion out of it, the fear and greed component, and it makes you make good decisions. And I think at this price, once we see gold above 2,000 or greater and silver above 30 or greater, this acquisition is not going to matter because of the profitability of the overall entity. So, I look at it as just a little bit of noise right now, but then it's giving me a great re-entry point into something that I really like. And 124% from last year is not something, it's not too shabby. It could have been better, but, I think going forward, it's going to be even better.
Okay, let's take a break. Jaime Carrasco taking your questions on North American dividend payers and precious metal stocks. We'll be right back. Your first idea, Jaime, is Equinox Gold.
Yeah, this is a new entry into the portfolio only because Premier Gold got taken out by Equinox Gold. I've looked at this one for a long time, and I think it's a really good entry point at this price at $10.50. We have it with a $14 target, which we just dropped a bit. I think that's more because of the acquisition, but this is a very well executing company with Mark McEwen at the not McEwen. What's his name? Sorry, I have a little bit of a black on the name, but yeah,
keep going. All
great
updated.
addition.
Yep.
I'm very happy to hold it.
Okay, so you're sticking with that one. Bear Creek Mining, I always think of them as a Peruvian silver play. Am I out of date on that?
No, you're 100% correct, and that's why I like it. I like silver.
Okay.
I think silver is going to have massive upside on the price because of the leverage. Silver at 26 is a gift. And Peru is silver country. Let's not forget that silver, 80% of it is a byproduct from copper mines or other mines. 20% is pure silver, so they're very rare. And this, I think, is going to be an excellent deposit. We have it at $6 target on this one, but a speculative buy on the development. And actually on Peru, I'm actually comfortable. There's an election coming. Let's see how that plays out. But so far, the elections in Ecuador and I think Colombia have gone positive for mining. So I like what's happening in Latin America.
Okay, and what about we could get a more left-leaning leader in Peru, couldn't we, who might want more out of the mining industry?
We could, just like Mexico, we could. But again, I think Peru on its own is much more developed, much more closer to Chile. So I think if anything, we're going to end up with is greater labor costs because of the unions. But again, upside on the price will pay for that. That's why I'd rather see all of the labor issues get resolved right now at these current prices before we get the upside, because then they can come asking for more a little bit later and buys us time to build some margins.
Your final idea here, newfound gold. Remind us what they're all about.
This is exploration. So I chose 3 companies, gold producer, silver producer / developer, and then exploration, back to the exploration company at the beginning. These guys, it seems to be a massive deposit. I like that. We have it as a whole, though. We have it as a whole with a 425 target. It's currently trading above $6, and I think that's going to continue because the drill results are coming in amazing. What actually is really good is that Eric Sprott, I think 2 weeks ago, added about $15 million to this company. Like, he really added to his position. That's always a good sign. So he also thinks the same of it. And I think we have the possibility of having a world-class deposit. We're not talking about original mine. If this thing continues the way it's going, it's looking to be a massive discovery, and they have the land package. This is a very big land package, right beside Gander, Newfoundland, one of my favorite provinces in Canada, Newfoundland and Labrador. So it's good for the rock.
Okay. That's interesting. Yeah, there's a bit of buzz about Newfoundland now in gold terms. Marathon Gold attracting attention as well.
Yeah. So I think, and these guys are going to definitely lead it if the drill results continue the way they're going. I think yesterday they just
what are they looking?
Results.
Sorry, I was going. Are they looking at an open pit or an underground project in Newfoundland?
Everything seems to be at service right now. I think the drilling's no more than right. So it has the look of an open pit. Again, I think it's too early to define that, but we're definitely having the discoveries, and they're coming in like in beautiful grades. So yeah, I would let this one run for a while longer, which I have been, and I've been in it for quite a while. I've been in it below the dollar range.
Jaime, thank you very much indeed for joining us.
Always a pleasure. Thank you for having me.
Jaime Carrasco of Canaccord Genuity. Okay, thank you very much.